gentlemen, this is an acid TV beta test. I, not very frequently, because it drives me bonkers, but sometimes I watch financial TV. And I had this idea that we'd go through Bloomberg surveillance. Why? Because I can get it on my TV, it costs me nothing, I'm cheap. B, because it's Jonathan Ferro. Jonathan, for what? If you have the misfortune of seeing this, my brother, you are the best in the nutty empire of financial TV. And anything that passes here, I love you, kisses to you. But I thought, and I watch it, if I watch it, I watch it after the close. And I don't know, it helps to catch up with the crazy people in markets. So shall we have a go? I'm gonna press play.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Horder.
Who?
Live from New York City this morning. Good morning, good morning. Your trading day starts right now for our audience worldwide. This is Bloomberg Surveillance and your scores.
I mean, Jonathan, what are the scores on the doors? I mean, this was, what's the time now? It's 9 o'clock. This was 12 hours ago.
Shaping up as follows. We're down on the S&P once again, down by 0.3% on the NASDAQ 100.
0.3%. In other words, market's flat.
Down by 0.4 on the Russell, the small caps down by 0.3. Coming into
markets are doing nothing, but we have to entertain you. Dopamine, come on, people, wake up, take coffee, have a donut. Don't take a donut.
Wednesday attempting to shake off an ugly start to September following the biggest one-day loss since the early August rout.
I didn't realize what stocks. Did stocks fall a lot yesterday? Did stocks rally close to their all-time highs? I think I was suggesting that. And what did they fall yesterday? Wow, thank goodness for financial TV.
And to watch this morning once again in the pre-market, it's Nvidia. Nvidia trading just a little bit softer, down by 0.8%. It just had its worst day since April, down by just short of 10% in yesterday's session. A loss of almost $280 billion in market.
$280 billion. Now they're going to say something really preposterously silly.
Cap, the biggest single day loss of market cap ever in the history of this market.
That is, so if you see me posting charts, they're on a log scale because the constant march over time of prosperity and asset price inflation means that you have to adjust. So it's true, biggest absolute decline in the market capitalization of any US stock yesterday in Nvidia. Yesterday might be 2 or 3 days before I edit this. But it's just because everything is absurdly overvalued. We have $3 trillion companies today. The calibration should be the percentage change in the market capitalization. And I think, as you said, they've dropped 10%. Heavens, stocks constantly, not the largest, but every now and again, they fall 10, 15, 20, 25, 30, 35, 40, 50%. So, Jonathan, you're being on television, you're being a little bit sensational. Anyway, I digress.
Bigger than the market caps of Chef.
Actually, I've got a good idea here. Watch.
Worse this morning.
Yeah, things are getting worse. And after we saw the stock tumble yesterday, it was dealt another blow from Bloomberg's reporting about the DOJ. First, they sent questionnaires to companies like NVIDIA, and now they are sending legally binding requests, aka.
It was brought down by Bloomberg reporting. Really? I don't know if that's very true. Anyway, I mean, who is this lady? She seems very kind of like the girls from New York, sharp dressed. She's trying too hard and she's a little bit nervous. She's speaking very rapidly, very, very insistently, and it's driving me bonkers because I've kind of watched a bit of this in advance, my homework. Anyway, but I think it never makes sense. But in the interest of time, let's watch it at 1.75 speed. Boom. Play.
Subpoenas, which is another step, Jonathan, basically the government to launching a formal complaint. When you look at the market share of NVIDIA and how much it controls, Missouri says it's about 70 to 95% for the market for AI chips.
I think you spoke to a lot of people in yesterday's session. What was the sell-off really about? We'll get into that.
It's the only at-scale manufacturer of the AI chips. So obviously a 75 to 90% market share. Anyway, Jonathan.
Here's the take from Bank of America. The 5th of August shock reminded us that markets can remain fragile, certainly fragile yesterday, and a stronger Fed put an AI bubble potential only raise fragility risk.
And then officially it's standards. How does the market read that? This 50 basis point cut. Is this the fact that the market says, well, the Fed is just in behind curve? Or is that the Fed signal to the market that...
Honey, breathe. I mean, I know there's on 1.75, but breathe, honey. Like, take it. Ralentir, the French would say.
Bad news is bad news, and we're doing this because we actually see economic conditions are really worsening.
Equity futures right now, just a little nicer, softer, negative by a quarter of
Well, you know, Jonathan, you just told us.
If you're just joining us, welcome to the program. Here are the scores in the bond market. Treasury yields on a 10-year at the moment. Look a little something like this, down 2 basis points to 380 on a 10-year. We're down about 3 basis points to 383. And foreign exchange for euro, just a little bit stronger. How much price action there? Euro dollar 110.53. Coming up this hour, we'll catch up with Roscoe Stock of BlackRock, following Nvidia's record-breaking one-day loss. Baker Hugh CEO Lorenzo Simonelli on his outlook for energy markets, and Kate McShane of Goldman Sachs on the health of the US consumer. We begin with our top story. Traders kicking off September with a bad sense of deja vu after stocks posted their biggest one-day decline since the August 5th.
First thing. Okay, hold on. Who the hell is Russ Kosterich? I'm going to check. I'm going to check my, I'm going to check ChatGPT. Hold on, folks. I press pause, but you're back. Who is Ross Kosterich? Has he got an E in there? Kosterich. BlackRock. No, not Blackjack. BlackRock. He's a prominent financial expert. He's an expert, people. BlackRock works largest asset manager. So I've seen the future. Well, this guy, before he comes on, he gets, they sit him down like, listen, okay, we manage a shit ton of money, and you're going to go on and you're going to say intelligent, sweet, calming things. Remember, Ross, what are you going to say? Sweet, calming things. Why? Because we manage a lot of other people's money. Never say panic. Okay, so what else about Ross? He serves as the portfolio manager for the Global Allocation Fund. This is one of the flagship mutual funds. Decades of experience. He's also an author. He's a commentator, you don't say. His expertise stands across. I don't know. I'm getting bored. Let us rejoin the fray. On back. What's Ross saying? This shall be spectacular.
Several months or so, it felt like we're pulling back your allocation to equities, just a touch and trimming, reducing the overweight in tech. Where else have you been pulling back?
We've generally been reducing risk. We've been doing a couple things. We have been pulling back our over.
Oh, damn. We have been reducing risk. Now, that is an easy thing to say. And Jonathan's not going to push him on it. He knows that. He's been reducing risk. Okay, there are 3 ways of reducing risk. You take down your leverage. Mutual fund won't be leveraged, so we can rule that out. Number 2, you reduce your gross allocation. Ross, I just don't think you've been cutting your gross equity allocation in that big mutual fund of yours. You will be 99% invested or thereabouts, something above 95%. If this market goes down, you're going to go down with the HMS Unsinkable, my friend. Have you been buying, maybe you've been buying puts, albeit puts probably the ball was a bit, probably they're looking expensive. So you've been reducing, okay, Ross, you've been reducing risk. Tell me why, tell me more. Okay.
Good morning, Jonathan. I think it's pretty difficult. You could point to a couple of fundamental things. There's obviously who the salt ties Hendry, which you will remember, also contributed to the early August sell-off, but it wasn't that bad. And I think a lot of what happened was you had this melt up on Friday, it was strong close to the month, people repositioning, and you had some positions that we know is more product. So I would say that was more of a technical adjustment than any major shift in the fund.
Remember, number 1 in Ross's handbook, say calming things. So, we had the biggest one-day fall for a long time. What happened? Well, it went up a lot on Friday and it's just come down. People do not, I can't say the P word, don't panic.
Do you think things are lining up for an August 2nd repeat? An August 5th?
Okay, let me tell you. Jonathan has just asked, are we set up for another August 5th, plummet down in all risk assets? I've seen the future. Ross, he's going to totally deny this is a possibility. Let's see.
3p.
Well, we already had a bit of it on yesterday. I think what's happened goes back to the comment a moment ago. We're back in a world after several years where bad news was good news.
He's not answering.
And now bad news is bad news. And when you look at guys, I never again.
Oh, we love Ross. The hallmark of banal TV is the statement. We're in an environment where it used to be good news was good news, but maybe today is bad news. What the fuck?
It was not terrible, but it was soft. We saw the new orders component move down further. And I think this played to the fears that really been dominant since early August, which is what if the economy is softening more than we think, more than the Fed thought, and what does that imply for the market and particularly?
Is the economy slowing more rapidly than we thought? I mean, that sounds like, I mean, you know, on BlackRock, Ross, no, you can't say that. Let's see.
For 2025 earnings, which are somewhat aggressive.
Well, we heard from the chair of the ISM, Russ, yesterday, who said we're not going to see things really start to change here until December, January. People are waiting about interest rate reductions. There's also concerns, obviously, about the U.S. election.
Honey, please.
Could this potentially be a self-fulfilling prophecy when it comes to the manufacturing sector?
What?
A self-fulfilling prophecy? No, I'm not actually going to. I'm going to applaud that because she's kind of reflecting on Soros and reflexivity, where like economic agents, the people who run companies, are looking at the stock market, and if the stock market's going down, then they would say, how is the market smarter than us? And the portents the market's telling us the economy is going to get weaker, so maybe we should rein in spending. Kind of never happens like that. But like with NVIDIA has gone up 100 times in the last 10 years, right? So the strong message from the market, whether correct or otherwise, is, guys, spend as much money as you can expanding capacity. Anyway, Ross.
The economy overall, and Henry, you have these moments when confidence sentiment does drive actual economic behavior. But again, I think it goes to a few questions around uncertainty. What is the Fed going to do? I think the other big question is, what is the U.S. consumer going to do? Now, our view is they're actually in decent shape. The labor market is still relatively healthy. Balance sheets.
I told you he's going to tell you soothing things. The labor market's still pretty cool. The housing market's okay.
Are much better than they were 10 or 20 years ago. So we're not expecting a collapse. But there's no doubt the consumer slow.
The Russ say a collapse. He's not expecting a collapse. But the consumer, I'm going to tell you something, the consumer's slowing down a bit.
We're seeing pockets of communities in the low-income groups, and that is having an effect on behavior. And that's another thing that people are watching very closely to see how this feedback loop starts to take effect.
What about the fact that we have uptick in prices paid? Are you concerned about potentially inflation reaccelerating?
No.
Honey, inflation is not going to be accelerating. I don't know if you just saw it, like on Bloomberg, but oil, which has been trading in a long kind of sideways range, been kind of hugging the bottom of the range, it broke down today. And look at industrial metals et al. And look at the equity prices of all the industrial producer suppliers. I ain't seeing any inflation. So I think you just gave Ross a free pass here.
Particularly, there are definitely pockets where inflation has been slow to decelerate. We see that in the U.S. We saw that in orange overnight. We see it in Europe on the service side. But in general, our thesis is prices are getting lower. And
prices are getting lower. That's the thesis. It's BlackRock. People roll up. Put your money in the mutual fund. Prices are abating. You know, we've been taking risks down. I haven't validated it. I'm really probably making it up. But prices are, inflation is coming down. And so probably I'm going to be constructive on risk assets.
Yeah, some of the input costs, if anything. If you look at the tape over the last few days, last few weeks, we've seen commodity prices pull back very significantly.
Oh, I just said that.
Whether we're talking about iron ore on softer China day, whether we're talking about oil. So right now, I don't think the biggest issue is input prices. I think what people are going to be watching is demand.
So let's talk about capital allocation. We have called up a few times over the last several months or so. It felt like we're pulling back your allocation to equities, just a touch and trimming, reducing the overweight in tech. Where else have you been pulling back?
Now, hold on a second, Jonathan. Has he been reducing his gross equity allocation in his gigantic mutual fund? You don't ask that question, and he ain't going to offer it because he probably hasn't done anything.
Yeah, we've generally been reducing risk, so we're doing a couple of things.
Liar, pants on fire. I mean, in fairness to him, he's probably saying he's reducing the beta, so he's probably changing the weight in the stock allocation from the Mag 7. But he's only doing that because he's following the minutiae and like the roller coaster of stocks. That's all he's doing, right? That's not risk reduction.
Have been pulling back our overweight in equities. Most of that has been on the technology side.
He's overweight equities. I mean, maybe he's running some kind of permanent portfolio. Pinocchio, I don't believe him.
We've also reduced our underweight duration. We're still a little bit underweight on the long end of the curve. But
He's reduced his underweight in duration, so he's owning equities and bonds. Who knows? I mean, maybe I should look at the plan more. So he was underweight duration. So this is the guy telling you, like, price, inflation's coming in. I mean, is it 2%, people? Is it 2? No, is it 3%? Forgive me. Getting ahead of myself. But so he's actually, I mean, fair dues to him. He's been overweight equities and he's been a little bit underweight at the long end 10-year plus bonds. In fairness, I can't criticize that. But like today, I want to know, after the changes he's going to tell us about, is he now in line, and why is he still underweight the long end? Because he probably doesn't have the mandate to take the leverage to get, you want to be in the cash, right? The cash rates, the 2-year rate is pretty close to the 10-year now, and that 2-year rate could come all the way down to zero. The 10-year rate ain't going to zero. So you could make more money per basis point decline in the cash. Am I speaking rapidly? I mean, it's just Bloomberg makes my heart beat faster. So I don't think he can play yield curve. I don't think he can leverage the cash end of the bond market. So really his only allocation would be like 10-year, and really if he wanted leverage but more risk, he'd be owning the TLT, but the longer durated treasury bonds, because dollar for dollar, you can get a bigger bang for your buck when they move. Now, that can be a double-edged sword. They can go down more, they can go up more, but it looks like they're going to go up more.
To where we were 3, 6, 12 months ago, we're much closer to the benchmark than we've been in some time. Obviously, that reflects the fact that we have seen this improvement in inflation.
Benchmark. It's absurd. Again, we're much closer. How closer? What was your wide? Were you like 20% away from the benchmark? I doubt it, because they don't have the balls to do things like that. Is your wide like, what do I mean wide? I mean the farthest dispersion that you have in your variance versus benchmark. It will be tiny, right? You're just talking. I mean, I talk a lot, but I mean, I once did it.
And this dramatic shift in the Fed's reaction function.
Can we talk about foreign exchange and link to this too?
Foreign exchange, dollar again. I love Jonathan.
Moment around 145. A breakdown in yesterday's session. Just a reminder that BOJ is still keen on hiking interest rates for us. Do you think we have reduced the link between what happens in foreign exchange and the relationship with risk assets, particularly here in the United States?
Why? Okay, so let me answer that. Jonathan, why on earth would we have broken the link between foreign exchange, dollar, and risk assets? They're all joined, they're all integral components in this absurd game. Why should that have changed in the last month? Anyway, let's see what Ross says.
I think you did clear out a lot of that freight, but it's one of those things that it's not important until it is. You already hear stories about, now the Swiss franc might be the funding trade for carrier.
Oh my God, right. Ross, boom, like, so, oh yeah, I'm hearing retail, preposterously uninformed banter chat that the dollar yen trade, the carry trade, has been extinguished, right? No, it hasn't. We're talking about many trillions of dollar yen in size. It's come down a bit, right? And then what does he say? Yeah, and people have moved on to the dollar Swissy. Swissy rates very low, granted. But check in on Acid Capitalist. Where am I? Underscore, what is my name? Hendry, surname, underscore Hendry. No, at Hendry underscore Hugh. And I can proffer you some alternative understanding that the dollar carry trade really has a lot more to do with the health of the Japanese banking sector, and it has a lot more to do with whether JGBs are losing their moneyness. And by moneyness, I want to say the willingness of other banks as counterparties to the Japanese to accept JGBs kind of pari passu. Like, if you offer me $1 billion equivalent of JGBs 2, 3, 4, 5 years ago, I, as your counterparty in the Eurodollar private banking system, yeah, I'd give it. You give me collateral, I'm the pawn shop guy, I would give you $1 billion back. In the last 2 years, the dive in the yen is saying that the pawnbroker is like, my friend, I got reservations about the moneyness of your JGBs. It's got nothing to do with Switzerland. Anyway.
I think what it does go to is less about the dollar yen. Obviously, there's some very interesting dynamics there with the DOJ, which is normal.
Everything to do with the dollar yen.
Policy at the same time, no central banks looking to ease. But the bigger question is, where is there still crowding? You know, we know that there was crowding in some of the AI things. We know that there was crowding in some of these currency markets and carry trades. And this is always the risk, that when you start to see this pullback in risk appetite, where else do you start to see these little explosions that can disrupt markets?
When we see the pullback in things like technology and AI, Russ, do you think individuals should actually buy these moments?
Yeah, I think it depends.
Should you buy them, Roz? Is it an opportunity? I'm really excited. I'm young. I'm new here. I've got big ambitions to be big on Bloomberg.
But in general, argues that these themes are going to work long term. So yes, you're going to 5 to 10 year.
Again, what did I tell you? Roz has been advised, go on and talk palliatives and say soothing things. Technology sucks. I mean, again, may I repeat myself? NVIDIA has risen 100 times in the last 10 years. But in the long term, it's going to be fine. That's a bit like March 2000. And you could say, hey, listen, Amazon's risen 100 times in the last 5 years. I'm making that up, but it went up a lot. Amazon is trading 115. And in the long term, you're going to be swimming in it. It's going to be one of the greatest companies in the world. And that is true. I mean, by and large, he's not far from the mark, but it's just, he's like centimeters and millimeters. I know you Americans talk inches. If you're an inch away, you're in the realm of absurd. What does absurd mean? Amazon fell, so the prices have all split and adjusted, but the metric that I have, March 2000, Amazon was trading 115. Where was the wide? Where was the low that it traded? Let's look at Roz. Look at him. He looks like an upright. I mean, I would give that. Would you give me money? Would you give this guy money? You give this guy money. Amazon 115 dropped to $5, people. $5. Okay, but his assertion is correct. In the long term, over the next 25 years, you made bundles of money. But my friend, that's not how we invest, right? It's the deviations away from the constant march higher in all these risk assets. It's the deviations that wipe you out. If you drop 50%, probably you're going to realize you're going to puke some of that. And then you've got to put it all back in, and you've got to make 100% just to break even. But Palliative Joe here, Palliative Ross from BlackRock, he's here to tell you soothing things so you don't spill your coffee in the morning.
And you're seeing pullbacks over 10, 15, 20%. I think at one point earlier this summer, the semiconductor index was down 25, 30%. That probably created an opportunity. So if you can have a long-term perspective and you're thinking about what are the things that can generate earnings growth, cash flow growth over the next 5 to 10 years, I do think we're going to see some opportunities later this fall as you take advantage.
And let me stand back. I don't know if you can see that, but Bloomberg, they have 2 days. 2 days. This is how absurd the system is. 2 days of the NVIDIA stock price.
Just some volatility.
Russ, let's discuss where else there is some crowding, particularly in foreign exchange. You mentioned the unwind of the carry trade. Kick Jake's a subchain, put it like this in the last 48 hours. The focus on the carry trade is to miss the bigger story, which is the exceptionalism of US assets and the US economy. How deep, how entrenched, how much have we accumulated in a very, very deep, big, large dollar overweight over the last several years that needs to be unwound beyond just developments in dollar yen?
Reasonable question. Accumulation of dollar assets. So to my mind, this is the accumulation of dollar risk-free treasury assets has been the phenomena of our generation. If we go back almost 100 years ago, we were on a different form of money where the collateral, the kryptonite, which allowed the private sector banks to extend credit, largely back then to corporations. Today, they're extending credit to jokers like this guy for leverage in financial assets. Did I call him a joke? That's a bit unfair. So it used to be gold was the collateral for the banking system. But from the late 1960s, early 1970s, we switched over into using treasuries, the risk-free asset. And over the course of the last 40 years, that risk-free asset has just exploded in terms of the demand for it. The demand explosion has come from sovereign governments like China, and they are suppressing and creating a false market, a misleadingly undervalued representation of the renminbi versus the US dollar. And to achieve those purposes, they have to buy US treasuries. Now, what these jokers will go on and contend is, what will they contend? They will contend that now these sovereigns, they're going to change their mind. They've been doing it for 40 years. They've accumulated, China probably has 7 trillion US dollars of treasuries. What is 7? 7 in the context of $25 trillion US economy. 4 times 7, that's kind of like just under 25% of the size of the US economy. China owns in treasury bills. And so financial TV, so Ross, he got to give you palliatives, stay in. By and large, they're the same. But Jonathan I like, he's my brother. And Jonathan's like, let's make it exciting. What if all those sovereign governments sell their US treasuries? I hear that a lot. They ain't gonna do it. Maybe I should explain that later, but let's listen to Ross.
I'm not sure I would agree with that.
Okay. Maybe he's getting a bit acid.
Dollar obviously had a very strong run for a long period of time, but that did reflect economic fundamentals. It did reflect what was what we call a U.S. exception.
Okay, he did say the dollar. Oh no, I busted it again. Merde.
Large dollar overweight over the last several years.
I'm too trigger happy on this. But he did say the dollar had been, did he say exceptional? Like very strong over a very long time. It is not true. For the longest period, 10, maybe 15 years, the dollar has been, the wides have been, I want to say 97, the highs have been like maybe 112. By and large, with some volatility, price gyrations, it's traded around 102.
That needs to be unwound beyond just developments.
I told you, John, it's going to get unwound.
In dollar yen.
I'm not sure I would agree with that. The dollar obviously has had a very strong run for a long period of time, but that did reflect economic fundamentals. It did reflect what was what you call a U.S. exceptionalism, or just a differential in growth. And obviously, it reflected a Fed that was engaged in the most aggressive tightening campaign in 40 years to bring inflation down.
So again, fallacy, don't know if it's a fallacy, but a commonly held prejudice in markets is that it's interest rate differentials. Like the US target Fed funds rate is 5.25 to 5.5. In Japan, it's been 0 forever. And in late July, very late July, the Japanese finally raised it from 0 to 0.25. And so people say, well, the foreign exchange market, rationally, it does. It has to, when you invest in the FX, it's essentially, it's not forward points, but you invest in forward. And for the price you pay, just like a futures contract in a commodity, will have a curve which will reflect the differential in interest rates. Is that the principal determinant in where the random drunken walk of FX prices will take you? In my way too long experience, no, it's not. Anyway.
But if you look at the long-term outlook and you think about many of the companies that have been outperforming and why the S&P 500 was such a strong performer, a lot of that was based on the underlying fundamentals of not only the U.S. economy, but the U.S. corporate sector. And I don't think I would describe that as a bubble.
So, Russ,
not a bubble. Not a bubble. It's the overvaluation of everything. I mean, but it's not a bubble.
Do you not think that period of US exceptionalism has come to a close, though?
John, Ross, take a break, take a coffee. Why, Jonathan? Why has that period of US exceptionalism come to an end? I mean, actually, in the last 40 years, China's gone from a GDP of nothing to a GDP of almost 20 trillion. It's almost the size of the US. Is it not more accurate to say, hasn't the period of Chinese exceptionalism, hasn't that come to an end? Anyway, this is why I find financial TV so annoying.
No, I don't think that U.S. exceptionalism, however you want to describe it, if we're going to define that as the ability of the U.S. economy to be resilient, if we're going to define that as the high quality of many of these world-beating companies, no, I don't think that's come to a close. Yes, many of those trades have become crowded. You may not want to chase it at these levels, but the underlying fundamentals, I think, are still solid.
I don't necessarily disagree with that. Got to give the guy a break. I thought he was set up with quite a silly question. Sorry, Jonathan, but reasonable. But his reliance on solid companies, when you buy them at the wrong price, can be a very, very painful investment.
Russ Kostrick of BlackRock. Russ, appreciate your time, sir. As always, thank you. Try make sense of what is difficult to make sense of in the last 24 hours or so.
Ross, thank you so much. You've still got a job to go back to. You came on, you spoke for probably 7-8 minutes. You looked impeccable, and you didn't say the word panic. You spoke in riddles. I actually know the world of finance, and you didn't say anything. And you pretended that you were like this risk manager and that you were bringing risk down. You weren't challenged on it. I mean, I just want to take a gun. I want to blow my brains out. Anyway, this is the end of the beta test. Maybe I'll do this again tomorrow when I've got better light. Boom.